everyone, I'm Dr. Vidya, and in today's video, let us learn something about cost accounting. Before we learn as to what cost accounting is, let us understand certain basic concepts such as cost, costing. Now, when we say cost, this basically denotes the amount of money that you are spending in order to produce or create a product or provide a service. What costing is, it refers to the techniques that are used for ascertainment of cost. Now, you might have a question as to what is ascertainment of cost is. It is nothing but finding out how much you are spending in order to produce a product or provide a service. Moving ahead to cost accounting, it may be defined as a specialized branch of accounting that involves majorly four things, that is classification, accumulation, assignment, and control of costs. We need to classify costs, say for example, it may be a direct cost or an indirect cost, then accumulate them into one particular cost center, then assign them to different products or different cost centers. And once we get to know what is the cost, we can go ahead and use cost control techniques. Moving ahead, let us look at some of the functions or objectives of cost accounting. The first one, as I already mentioned, is the ascertainment of cost. Here, you are going to find out. Ascertainment is nothing but finding out the cost of each unit of production or a job process or a department. So, it's not necessary that cost has to be ascertained only for a production or one unit of service. It can be either for a complete department. Say, for example, what is the cost or monthly expenditure of a sales department or monthly expenditure of a finance department, right? Then we talk about cost control and cost reduction. Now, this is another function of cost accounting that helps us in reducing the cost and improving the profitability. There are a lot of techniques which are used for this, such as standard costing, budgetary control, inventory control, or value analysis. We shall learn about these in the further videos. The third one is guide to business policy. Cost accounting helps us in taking decisions such as make or buy. Say, for example, you have two options, that is either to make a component or buy a component from outside. Now, this particular techniques will help us in analyzing whether we have to make the product or buy the product. Then, if there is idle plant capacity, can it be used for producing new products or more products, or can we introduce a new product? Then we talk about determination of selling price. Now, once you determine or once you ascertain the cost, you can add a percentage of profit to it and then determine your selling price. And apart from ascertainment of cost, cost control or cost reduction, cost accounting also helps in disclosing sources of wastage. Now, the wastage can be from any of these sources, that is material wastage or time wastage or any of the expenses that you are not using it properly, right? Moving ahead, let us look at the comparison between financial accounting and cost accounting before we understand all the nitty-gritties of cost accounting, right? Now, when we look at the difference, if you look at the purpose, we all know that financial accounts are prepared in order to report the same to the owners or the shareholders and other external users. And here you're analyzing the profit and loss of an organization. Whereas in cost accounting, the detailed cost information is provided to the management, that is the internal user, so that they can take important decisions. Now, financial accounting becomes a statutory requirement which is prepared according to the legal requirements of the Companies Act and the Income Tax Act, whereas maintenance of cost accounts is voluntary, except in certain industries where it has been made mandatory in order to keep the records under the Companies Act. If you're looking at the analysis of cost and profit under financial accounts, it reveals the profit or loss of the business as a whole for one particular period. But when you're looking at cost accounts, they show the detailed cost and profit data for each product line, department, or a process. Now, if you look at the periodicity of reporting, financial reports are generally prepared periodically, usually on an annual basis, or say, for example, biannually. But when you look at cost reporting, it is a continuous process and it may have to be done on a daily, weekly, or a monthly basis. Let us look at some more differences. And we're looking at the control aspect. Now, generally, financial accounting lays emphasis on recording of financial transactions and does not attach too much of importance to the control aspect. Whereas cost accounting is in place, or they have certain systems in place that help in controlling the cost, like we have budgetary control or inventory control or standard costing. If you look at the kind of data that is used, okay, in financial accounting, it is mostly concerned with historical records. That is what happened in the previous annual year, right? If you look at cost accounting, it is concerned with both, that is historical cost and also with predetermined cost. Sometimes, say for concepts like target costing, you need something called as a predetermined cost. Then we are talking about certain formats that are used. Generally, in financial accounting, we have single uniform formats that are used for presentation of data. That is, any company you take the financial statements are going to look the same. Whereas in cost accounting, they have different forms of presenting the information, and sometimes they are tailored to meet the needs of the management, and they are not very uniform in nature. And then we are talking about the types of transactions that are recorded. In financial accounting, the records are generally of external transactions like the sales, purchases, receipts, okay, that is done with the outside parties. But whereas in cost accounting, you're not only recording the external transactions, but also you are recording the interdepartmental transactions like issue of shares from one particular department to another, or say issue of materials from the storekeeper to the production department. Then we are talking about the types of statements that are prepared. Okay, under financial accounting, they prepare general purpose statement like the profit and loss account and the balance sheet or cash flows. Whereas in cost accounting, we have special purpose statements and reports that are prepared. Say, for example, loss on material report is prepared, or an idle time report is prepared, or a variance report, etc., is prepared. It becomes important for us to understand these differences so that the other aspects of cost accounting are understood better. That's all for now. Thank you very much.